Good morning, guys, and welcome to today's market update. Today is June 3rd, 2020, and it's almost 10 a.m. in London when we're doing this market update. Today, we're going to keep it quite brief, but hopefully powerful to give you guys an idea what's happening in the markets. And if you're new to this is a daily market update we host in the early mornings in London on the ATFX YouTube channel. And as well, you can see this one on the website investingcube.com, which is a website I created for traders like yourself to hopefully understand and manage the markets better. So let's begin and let's talk a bit about the headlines. Got some really solid numbers from China. You got the Caixin PMI services figures, and that's the private sector numbers, which show like medium and smaller firms. And you can see here how activity picked up from 44 up until 55, which makes sense. You know, if you close down the service sector and then people can't effectively work, and then you open it up, you get some huge numbers because you go from 0 clients to a lot of clients. And then you have here a 55 number. So that's solid reading. So the Chinese economy is recuperating, which makes perfect sense. You know, a lot of people, just a few months ago, they had no idea about COVID-19. Now everybody's an expert and telling you how the world is going to change. Yeah, of course, we're going to change a bit. But I think in the next few years or so, this might be an issue, but it probably won't be an issue. Like 102 years ago, we had the Spanish flu, which killed 40 million people at the time, and that got resolved. We went back to handshaking and going out to clubs and having a beer at the pub and restaurants and just getting on the tube nowadays in England here and the tube station. So I think we're gonna be all good, and that's what the market is pricing, and people are getting all excited about that. All right, so other data coming out today is ISM services anticipated to rise from 41.8 to 44. It's below 50, so it is contracting. Why is it contracting then? Well, because most of the US is still shut, even though things are starting to improve a little bit, and easing will probably come relatively soon. As well, we have ADP job numbers. It was probably going to show that the U.S. economy lost 9 million jobs which is an improvement from the loss of we had 22.2 in the prior month. Now, why is it like this then? Why is it less? Well, because people took a lot of decisions in the very beginning. Government told you, look, we're going to close down everything. So people said, okay, I'm not going to make money over the next 2-3 months. So they started to fire people. And then this less of that. Again, this is a bit forward looking, because if you look what happened in maybe other parts of the world, when the things improved, you start to see people coming back to work. And again, with the non-farm payrolls coming out by the end of the month, end of the week, the reading for last month showed that 80% of people classify themselves as temporary unemployed. And again, temporary can go to permanent if things don't improve soon. So that's a big risk, and that's what a lot of bears are betting on. But so far, it looks like we're going to improve faster than what a lot of people thought it would do. Can I be wrong? Of course can we be wrong, but that's what we have, trend defining levels and stop losses. So we're going to talk about that in a minute. Elsewhere, you got the unrest that continues in the US, and we all know that. We can read about that in the news. I'm not sure exactly how this is going to affect President Trump's re-election. But I think things are progressing in the right direction. Minneapolis decided to sue its own police department, as far as I understand, and as well they're going to look into it and set up some sort of commission or something to investigate and root out systematic racism within the police corps. They're going to go back on the last 10 years and see if there are been racism in the core and try to root that out. This is I think it's the first good steps. The only problem with these things, it takes long time. But if they could maybe speed up what happened with George Floyd and see what happened there, and then try to get this process on, then I think we can start to see things calm down. But of course now things are a little bit bad, and what can happen here is that it goes from being just about Black Lives Matter and George Floyd to something bigger, which is the general sort of unhappiness within the US population. So that's still influencing things, but not necessarily as much. Elsewhere, Brent crude oil prices rose as well. There's talks that OPEC Plus might extend their production cuts for a little bit longer. Because what happened in the past is that they were supposed to cut a lot. So they cut a lot in the beginning and then cut less and then cut less. And then by January, they would literally cut very little. But it looks like they might extend those production cuts, which is helping crude oil to go upwards. All right, let's take a look a bit at the screens. Let's take a look at the charts, and we're gonna begin with the S&P 500. So this is what you're looking at here, and you're still seeing a bit of a bullish trend. So in the past we talked, we said a break to 2,993 will lift price towards 31.98. So we're still going towards that target, but we're not there yet. We moved up quite a lot, so we'll definitely book some profits here. And if we go back to 3,049, I would look to get engaged again. Just need to be careful if we have a pullback, what triggers that pullback. But overall, the trend is bullish, and as long as you're about 2,993, it's going to continue to be bullish. Here is the German DAX. German DAX is on fire. So we talked about buying here, and the reason for this was that this was being a massive rectangle. So we said buy here and target the upside. So you take something like this, like that, okay? And then we can probably go up. So we moved quite extensively towards that target. We're up quite strongly since then. From the breakup point, let me see if I can find it, what I'm looking for. There we go. From the breakup point, we're up a solid 8%. If you didn't book profits already, it's definitely a good time to book 50, 75%. It's up to you what you're going to do, but that's what I would have done if you didn't book any profits. I was trading the Dow Jones, and I had a very nice run up last week. I booked profits, and then on the pullback, I bought again. So I made some nice savings on the markets because I booked profits, and then it went back, and then it went up again. Imagine if you would have bought here, for example, you bought here, and then you didn't book profits here. Then when we went back almost to break even, of course, that wouldn't have been that nice. So I bought, you see it like this. I sold at the high, went back a bit, and then I bought. And then you get a little bit of extra money on the back of that. Looking at this today, you're still dealing with a nice uptrend. This is the monthly R1 level. It's a natural level where this price could stop. I would not be buying here. I would look for a little bit of a pullback. Of course, right now you might think there's not going to be a pullback. But what's happening here is you have pension money coming in. You have this push that usually happens by end and the beginning of the month. That's going to wane off, and we have summertime soon. So I think this will slow a bit, and it's all about the risk-reward ratio, and you don't have that on that chart here unless we go down to 11,895. Let's take a look now at the euro. This is the euro, and we are having a very good time here as well. We talked about buying on break to 110.40. The target was 112.89. We're not that far away from it. We're close to the monthly R1 level. Now, I know yesterday we said look to buy a breakout. We didn't go low enough, and it is like that, guys. Like someone out there has told you that there is a great buying opportunity every day. No, that's not true. Sometimes you don't. Many times it's not like that. I look for the breakout like this one here, when you have that very good chance that we're gonna go upwards, and if it does go upwards, you're gonna make a lot of money to compensate for many of the small losses. And that was a solid breakout opportunity down here, not necessarily up here. Now we can still try to buy dips, and if we do have a pullback, maybe to 11.62, I think that could make sense. Right now, everybody thinks that the dollar is like massively, it's just gonna lose out, and it is losing out. But it's losing out against many different currencies, especially against the Aussie dollar. But there's an end to everything, and right now it feels like it's going to go to the moon, the EURUSD, but it won't. Take a look at the Aussie dollar. I had some ideas here for my clients that we should be bullish, and look, it went all the way up. Yeah, but now we're above the monthly R2. We're starting to get a bearish candle on the daily, and this from its very lows here is risen by some cool 9%, which is a huge move for currencies. So, and it's starting to see some take profit taking here. We might continue to go upwards, like the same way we declined here, but I don't think that's going to happen. It's the same thing with the euro. We're going to go upwards. We have more to go, but let's not get too carried away. Let's wait for a pullback. If one is long from down here, it's nothing wrong with taking care and putting some of those profits into the trading account so we don't just leave them floating. GBP versus the USD as well had an amazing time, and I haven't really covered this one too much because we didn't have a proper trading pattern. Now we're very close to the levels. People sold here on April 30th. They sold here on April 14th. This is the monthly R1 level. We had a nice cool run here from the lows. We're up with some cool 331 pips. And from a purely technical perspective, if we take out the high, we can go upwards. But because this is the last low, right now, it's not a good opportunity to get involved. I think if this is capped, we're probably going to go down again. We're going to go down to 124.44. But because it's a bullish trend, I don't want to sell against it. What I would prefer to do, let it trade sideways. If we trade sideways here for a bit, maybe we can have a bullish breakout, turn to take out the lows, and we have a bearish move. Okay, so that's what I would do. Dollar yen. This is a very way as well to transition. So you have massive moves in the EURUSD. Good moves in pound dollar, good moves in the Aussie. So where should you go? Well, you can get involved in something that is not moving. And this is the dollar yen. And the dollar yen, we talked about buying a breakout to 108.09. You know it because I've been saying it for many days here in this daily show. And we got the breakout. And the market is now up with some cool 68 points. And I think we can go at least to the R2 level and the April 6 high at 109.38. The target itself, head and shoulder, you get yourself ahead, left and double right shoulder, has a target of 110.23. I think that makes a lot of sense. But in case you snoozed, well, you lost unless the price comes back. It's simple as that. You snooze, you lose. You had the breakout, we communicated it, it went upwards. Now you missed out. Let's wait for that little pullback. And you might feel, oh no, I missed out. Don't worry, guys. There's some more stuff for everyone, but not just today. So, well, actually, we do have one thing here. It's definitely a contrarian idea, and that's gold. So, with everybody being super excited, the bear is really pulling their hair stock. Is how can they get it so wrong? Guys, the bears get it wrong all the time. 70% of the time, stock markets close positively on the year. So those long-term perma bears that I keep on mentioning here, they always get it wrong. I know these people, some of them, and the reason why they do it is, again, because it's better business to tell you that the world is going to crash. And then you have all those people that believe in conspiracy theories, which there's probably some truth to everything. They all get super excited and they start to bet against it. But I don't know how they manage, but I don't think they're trading. I think they're just observing the market. Anyway, long story short, everybody's super excited now. What's happening with gold? Gold is pulling back. Why? Because you don't want to hold gold when you should be buying Zoom or you should be buying Netflix. Netflix had a nice breakout, by the way. I don't know what happened with that one, but they had a nice breakout. I think it was yesterday or something like that. You buy Netflix instead of buying gold, right? So what's happening here is you're having a bit of a pullback in the market, and nobody wants to have gold right now. But as long as you're about 1690, then people are going to be excited. And again, maybe the ADP number is going to be horrible. Maybe we're going to have a spike in COVID-19. There's a lot of things that could come back and haunt people. So this is your contrarian view. This is what I will be looking at. And this is a fresh idea. Is it a very good, high quality idea? No, it's not a high quality idea. So, yeah. And what else? Crude oil. Crude oil is bullish. We talked about buying the breakout here at 35.97, and it's looking good. We reached their first target here, and if we go back to 35.40, I think people are going to be buying again. We took out these highs. We still have quite a lot to go. We can still go up to something like $40 per barrel, so you definitely want to keep an eye on that. Let it come down a bit. Maybe I'm too far away. If you really want to get involved, maybe you can look at something like $36 per barrel, but let's wait for a little pullback and then we're gonna probably go upwards. Okay, we're gonna wrap things up, guys. Thanks so much for joining me. I hope you had a good day, and I'll see you guys tomorrow. I'm gonna start a bit early tomorrow. Just join us at investingcube.com, and don't forget as well to follow us on the YouTube channel. This is Investing Cube. You click on Daily Brief. Here is where I do the daily market update, Here is my Twitter as well, AlexFX00. And as well, if you're interested in my style of trading, you want to learn, I want to piggyback on what I have learned. I spent like some cool 8 years trying to understand the markets. It took me 8 years before I started to make money. Why? Because I did a lot of the mistakes you're probably doing right now. And I figured out a way that works for me, and that I share in this course. Is it going to be like a magic silver bullet? Is it going to work for everybody out there? No. Everybody's wired a bit differently. Everybody has different stress, how they tolerate stress. If you don't have a thick skin, for example, just stay away from trading or do something very differently. There's a ton of ways of getting around things, but there are some principles which work and have worked in the past that I share in that course. You can read more about it here. Just go to Learn to Trade for trading course, and also you can including trading coaching. It says Forex trading course, but it's for anybody trading CFDs really. All right, guys, have a beautiful day, and I'll see you guys hopefully tomorrow here on the ATFX YouTube channel. Don't forget to subscribe. Thank you, and bye-bye.